Hey everyone, Anthony Benuti here with InTouch Mortgage Solutions. It's Wednesday, April 13th. I just wanted to do this quick video to discuss the Bank of Canada's rate announcement. For those of you that may or may not have heard, the Bank of Canada has increased its overnight policy rate from 0.5% to 1%. This is a 50 basis point increase, very big move by the Bank of Canada, something that we haven't seen for 22 years since the year 2000. This is the consecutive increase by the Bank of Canada on the path to rising interest rates. Another thing to keep in mind is that the Bank of Canada does meet about 8 times a year. So the next time the Bank of Canada will be sitting down to discuss monetary policy and the policy rates to the overnight lending rate will be on June 1st. So just keep in mind for many Canadians who maybe got into a mortgage recently over the last 2-3 years, that we are basically coming from a point of very historically low interest rates, where the Bank of Canada during the pandemic had dropped its policy rate to the effective lower bound of 0.25%. So basically now we're starting to see rates rise back up to, pre-pandemic levels, as we are facing severe inflationary fears and basically a lot of more expensive things that are happening in the world. So one thing, the Bank of Canada has made it very clear in their verbiage that they are basically aggressively and forcefully tackling inflation. And this is something that's very important to understand, as they have alluded to basically anything's possible for them to basically bring inflation back down from 5.7% back down to 2.3%, which is their target range, and that's the major concern for the Bank of Canada. The Bank of Canada is also still monitoring, obviously, in global and domestic concerns, especially when it comes to what's happening in Russia and Ukraine, and how that war is actually impacting or disrupting supply chain concerns. Oil and gas, of course, these are major concerns, but more locally, how these changes are going to impact our labor markets, GDP growth, economic growth here in Canada, and in the labor markets, as we're starting to see strong data come out. And basically, we're seeing the government and the Bank of Canada, I should say, move from quantitative easing to quantitative tightening. So these are some things to keep in mind. But now, aside from all that, if that's all gibberish, just how does it impact your mortgage? If you're in a variable rate mortgage, basically this 50 basis point increase, you will see it basically impacting your payments. If you have a variable rate mortgage, as I mentioned, home equity line of credit, or anything that's on an adjustable rate product. So you will see this basically come through the pipeline in the near future. In the next couple of days and weeks, you might be getting correspondence from your lender, so keep that in mind. Now, what we did is just did a rough calculation to see exactly how this 0.5% increase to prime, which is basically how the banks dictate their payments when it comes to your loans and mortgages. So prime was previously at 2.70%. It has now moved up 50 basis points to 3.2%. And basically this adjustment of 50% can impact your mortgage by about $26 to $27 per $100,000 mortgage. So if you have a $100,000 mortgage, you're going to see an increase in your payments of about $26 to $27. Now, if you're in a variable rate mortgage and you're thinking, hey, do I lock in? What should I be doing right now? Always take into consideration a few things. Obviously, what your strategy is with your mortgage, if it's coming up for renewal, if the maturity date is fast approaching, if you're planning to refinance, restructure, take out equity. As locking into a fixed rate mortgage, it does lead to higher penalty costs. Now, just another thing to consider is that fixed rate mortgages are hovering in around the 4% territory, depending if you're looking to lock in for 4 to 5 years. So you have to keep in mind, do the numbers to see exactly between the 4% and your current variable rate mortgage, what your payment difference is going to be. As right now, we're still seeing most people with variable rate mortgages and variable rate mortgages that are being offered that are still sub 3%. So you have to keep in mind that range and that gap, but obviously whatever fits your requirements for you and your family. And for those of you that have a fixed rate mortgage that maybe you got back in 2017, 2018, as we approach 2022 and 2023, you do need to take into consideration that fixed rates are elevated right now, obviously, and that your mortgage may be coming up to maturity, and the rate that you may be being offered in the next few months might be significantly higher than your current fixed rate mortgage that you're with right now. So to take that into consideration, maybe reach out to your mortgage professional, have a discussion about your options to maybe renew early to securitize a better rate, whether it be fixed or variable. So hope everyone has a great day, and we'll see everyone on Friday.